All right, let's get to our next story, which is Bridgewater. So this came from the FT. Ray Dalio basically unable to really recoup some of the losses for the low bond yields that we saw in August. He can't get a break.
He can't get a break. This has been a story all year, and this is off of last year when they gained, the Pure Alpha main macro hedge fund gained about 14.6%. I love pointing out Kathy Burton's story from beginning of the year, where there was a small county in California that pulled dozens of millions of dollars from the Pure Alpha fund because they didn't like their performance after a good year. The reason Kathy wrote that story, and if you read into it, it says, does it presage more redemptions? I think that's something really interesting to ask after a tough year like this one.
But also, I mean, Ray Dalio has been out there basically talking about how bad everything is, how bad the cycle's going to be when it turns, basically backing up it feels like then he's going to be sticking with these lower bond yield calls for some reason.
We'll see. I mean, the environment has changed quite a bit. Central bankers have been not reacting the way that they always have. I mean, that was a big theme over the weekend and throughout last week. What Ray Dalio has called this is a great sag of an economy. And so what people are thinking is lower for longer in a lot of ways across the world. You see Germany negative, Japan negative. And so if that's the case here, then whether he's going to really change his calls with some conviction, we'll see.
Yeah, and I wonder too, and this will get into the next segment as well, is it are we at a binary risk for these kind of investors? Like you either have a recessionary view or you don't, and then you base your view on that, and then it's a binary hit or miss.
Right, and for what it's worth too, macro investors at large have not been down as much as he has. So even if a lot of other people had the same call that rates would be lower, not everybody was hurt by them.